Hello, I'm Niall Walker. Welcome back. I'm Owen Walker Insurance Agency in Marysville, Washington. Had the opportunity to work in the insurance industry for almost 40 years. Today, I just want to visit with you about one of the most common questions I get in my office and my staff as well, and that is, how do I save money on my auto insurance? We see in our industry cycles, and it certainly follows the trend of the economy. So when the economy is very challenging and income has been reduced and people are struggling to make ends meet, money seems to be the number one reason, or the cost of the insurance is the first thing they always look at. I think it's very important for you to first understand why you're purchasing insurance. If you have an agent, and even if you don't have an agent and you're dealing with somebody online or a toll-free number, make sure that as you visit with that individual about your insurance policy, and we're talking about auto insurance, make sure that you fully understand not only the coverage that they're talking about, the liability, the uninsured motorist, the medical payment or personal injury protection, and the coverage for the vehicle itself, which is comprehensive or and collision. Make sure that you fully understand what you're purchasing, what the limits are, how that works. If you do not, you could be spending a lot of money, and the most expensive insurance policy is the one that doesn't cover the loss after the loss occurs. It doesn't matter how much you're paying in premium. If it doesn't do what you intended it to do, you've wasted a tremendous amount of money, and it can cost you huge losses and financial challenges if that claim is not a covered claim. So again, please make sure that you're reviewing that information with your agent or company representative if you're dealing directly with an insurance company. That is probably the most important part of making sure that your money is being well spent. There are some things you need to also be aware of to help you make the wise decision on how you can lower the cost of your insurance. First thing to understand is there is lots of factors the insurance companies use to determine the rates. And what they do is they try to get the most similar people together in large numbers so that they can have a premium or a rate that's stable and as competitive as possible. So if I have 10 million 35-year-old female drivers that are married and have no driving citations or any accidents, by taking a look at that huge group of people and determining premiums based on that huge group of people, the rates can be very stable, very predictable, and the insurance company knows exactly what they're going to be paying at the end of the year in claims. These insurance companies, because of technology and the computers, they're now using a lot more factors in determining those pools or those groups. Used to be in the state of Washington, there was like 4 or 5 different things that we would use to determine a rate, and we used to actually use workbooks, and you look it up and there would be an increase factor to increase the rate if a driver was under 30 years old, and there'd be a credit if the driver's was married, and so on and so forth, and there was only like 4 or 5. With the computers now, they're using probably 30, 40, maybe 100 different criteria and determine these rates. And so it's important that as you work with your agent or when you talk to a carrier through their employee, that you're really giving them all the information you possibly can give so that the rates that you're using are accurate rates. Certainly there are things that will change that premium more significantly, which you have no control over, for instance, your age. But these are some of the things that they use. So the age of the driver, the financial strength of those that are driving, so again, the credit scoring type system, citations and accidents, length and limits of continuous insurance, education and or profession, whether or not you have multiple vehicles or multiple lines of insurance. So somebody that has a home and they want to insure their vehicles, if they insure their vehicles with their home, it will reduce the rate of the premium on the autos and may even reduce the premium on the home. So in many cases, you'll save money if you need multiple types of insurance to insure those multiple types with the same insurance company. Now, not always, but that's normally the case. So please make sure that when you review your coverage and your rates with these agents, that you're reviewing that information as well and taking a look at those package policies. They also look at your commuting And obviously, youthful drivers is one that will have a huge impact on your rates. So those are some of those factors that you need to be aware of, and please make sure that you're giving that information to whoever you're working with as an agent. Also, take a look at your policy and review the coverages with somebody you trust, because it's not uncommon for you to have duplication of coverage. So for instance, we're seeing a lot of auto insurance policies, including things now in the policies that really aren't insurance, such as roadside assistance or towing, or car reimbursement for car rental. They're really not insurance, and for years there was other organizations that provided that kind of coverage, such as AAA. There are so for instance, there's companies like AAA forever have provided those kinds of services and had coverages for that. I can't tell you how many times I have people come to the office that are with AAA and they'll still, and not knowing or don't understand it, they'll also have those same coverages. So take a look and make sure you're not duplicating coverages. Duplication of coverages could also be you have medical payments, or personal injury protection on your policy, which is medical coverage for the occupants of your vehicle. So you as a driver and your passengers. It's low limits, either 10,000 or 35,000. That's your two options. But if you have a very good health insurance plan with very low deductibles, that may be a coverage you don't need. So again, that's medical payments or personal injury protection. Again, it's medical coverage for you and the occupants of your car. And if you have good health insurance, that may be one coverage. It's a duplication. Same thing with uninsured motors. Uninsured motors protects you for your medical expenses and the damage to your vehicle in the event somebody hits you. And they're liable, but they either don't have insurance or the limits they're carrying are not high enough to pay for all your injuries. Again, if you have health insurance, that may not be as a critical or important coverage if you got very good health insurance. Health insurance is unique in that it covers any health issue, but it's secondary to any collectible insurance. So if you have a health insurance policy, but you also have medical coverage or personal injury protection, or it's an uninsured motorist claim, those coverages have to pay first and will pay up to their limits before your health insurance will step in and pay any of those health costs for your injuries. So it kind of is a repetitive coverage, but if you have a health plan that's got very high deductibles, and it's not uncommon for me now to see individual policies with a $500 or $5,000 deductible and maybe even a $10,000 maximum out-of-pocket limit, then MedPay may be a very wise choice. So again, take a look, make sure you're not buying insurance. It's a duplication of coverage you already have. The other one that I see a lot, duplication, is people will go buy new cars and they'll buy coverage through their dealers. The most common one is this residual debt or depreciation coverage on the vehicle. So let's suppose you buy a brand new vehicle. You spent $50,000 for this SUV, and 3 weeks later it's wrecked. You put no money down, and with the taxes and insurance you actually owe more than what the vehicle purchase price was. And now, because it's wrecked, and it's no longer a brand new vehicle because you drove it off the lot, instead of being worth the original purchase price, it's now worth maybe $8,000 or $10,000 less. Dealers are now selling coverage for that gap, and your policy, auto policies, has the same coverage available through what they call residual debt or residual lease, which either one of them makes up the difference between what the vehicle is worth and what you owe on the vehicle. And I also will tell you that the coverage that's sold through the dealers, you're going to be paying probably 2 or 3 times more for that than you would on your auto insurance policy. So again, make sure you're not buying duplicate coverage for the same thing and not be aware of it. The last thing when it comes to lowering your costs is don't buy insurance on things you would take care of yourself. So my philosophy on insurance is a lot of people coming together and pooling their resources to pay for the huge claims that we can't take care of ourselves. So for instance, if I'm driving a car and I happen to make a mistake, I've never had an accident in my entire driving career, but tomorrow on my way to work, I am distracted by my phone ringing and sliding underneath the chair or whatever, and I'm on the interstate and the traffic in front of me has stopped, and there's emergency braking that everybody in front of me is doing, and I look up just to see that everybody else has stopped and I'm still moving, and I slam on my brakes and I don't have enough time to stop or the distance, hitting the car in front of me and pushing them into the car in front of them. Somebody's injured very severely, and as a result of that, I am responsible for their injuries, their hospital bills, the wages that they lost as part of not being able to work in their employment, the damage to their vehicles, all those things I'm responsible for. And let's suppose it's combined $600,000-$700,000. I would hope that we're smart enough to really take a look to make sure our limits on our insurance policies are adequate for those kinds of losses. However, a towing bill maximum is going to be $150 or $250. Does it make sense for me to spend money on that coverage and have very low limits on the liability? Again, you need to review that. But as much as you can retain yourself and cover yourself makes sense. The other thing you need to understand in the insurance industry, for every dollar we collect, we only can spend about 70 cents of it on the claims because of operating expenses. So the insurance company consumes about 30 cents on every dollar, and then they pay all the claims of that 70 cents. So as a consumer, if I can retain anything on myself, I already know that I've saved 30% of the cost because, I'll be writing the check directly and there won't be expense costs in there. So take a look at your deductibles, and maybe you might not want to cover things such as comprehensive and collision on your vehicle. Your vehicle is an older vehicle, 10, 15 years old, it's only worth $2,000 or $3,000 or $4,000. You may decide, make sure you have your liability insurance, but comprehensive and collision may be one that you may not need, and because you can recover from that small loss of that vehicle yourself. You do have the ability to do what they call storage layup. So if you have a vehicle, a great example is a pickup. I own a pickup that I do maintenance on my yard. There's about 2 or 3 months of the year that I use it quite a bit, and the rest of the year it sits. There's no reason to insure that vehicle, especially if I'm not concerned about vandalism or a theft of it. An older truck, and it's not worth a lot. But I do want to make sure when I'm operating on the road that if I run into somebody or injure somebody, that I'm going to be protected not to lose all my assets. So something like that, you can do what's called a layup, is what we call it. But you talk to your agent and they can remove all coverages except for possibly leaving comprehensive on there, which is the theft and vandalism and fire and that kind of stuff. So again, make sure you're not insuring vehicles that you don't actually operate, and lay them up if they're not going to be used for a period of time. And I would suggest that you don't do the layup or put them out unless they're being stored or parked for more than 30 days. In fact, a lot of agents just won't even process it for you. So it needs to be a significant amount of time it's not going to be used. Again, I mentioned to you that you should consider raising your deductibles. The other thing that we're finding a real challenge is drivers in the household. Because of technology, all the insurance companies are sharing information, and we are also using reporting systems, and companies all are reporting and giving us information about all kinds of things. One of the things that they're pulling in is drivers in the household. So let's suppose I have a teenage driver that has left the home and she's moved to Nevada or wherever, and she's now no longer residing there. Well, these reports come in and it still shows her in my household. And as a result of that, I'm paying for a 22-year-old single female on my vehicles, and she's not driving them at all. So you need to make sure that as you work with your driver or your agents, that you are reviewing the drivers that are being utilized to calculate your rates. Those are just some ideas of what you can do to lower your insurance costs or premium. That's a way you can save some money. I would suggest that you find an agent or a carrier whose representatives you trust. As an insurance agent, we get a commission. So out of every $100 you pay in premium, we may make $10 or $8 in commission. We want to retain you as an agent. We want our customers to keep coming back. And so it is important for you to, if your agent is unable to, for you to contact them and do a review with them. And I would suggest reviews happen anytime there's a significant change in your household, like teenage drivers leaving or going off to school or whatever, or buying a new home or whatever. So I would certainly do it then. And then I'd probably do it at least maybe every other year. Some do it every year. I don't know if that's quite necessary, but get with your agents, sit down and review everything. Now, the other thing you need to understand, these agents, in order to make a living, typically will have between 2,000 and 4,000 clients. Now, can you imagine trying to make scheduled appointments with 2,000 to 4,000 people every year? It's probably not going to happen. However, if you pick up the phone and call your agent and say, hey, I would love to come in and review my insurance with you, I assure you they'll take the time. You can come through and review everything and make sure you fully understand what you purchased, and that will save you money over the long term, and it will provide an opportunity for you to really understand what you're insuring against and that your limits are adequate to truly protect you. So anyway, that's my advice for today. It's been wonderful to spend a few minutes with you this morning. If you would like any additional information on insurance, and I'll be addressing other topics, it's available on my website, which is www.walkeragency.net. The last part of that is N-E-T. It's not .com, it's .net. I have these videos and other information that's posted on that website, and I hope this was some help. I hope you have a wonderful day. Thanks.